All right, everyone. Thanks for your attention. We appreciate it. It's January 31st. We're going to continue down the path of exploring and explaining this chart setup. All right, the next thing I'd like to focus on is the overlays at the bottom. So one of the things I mentioned earlier is I really like to appreciate the context of intermarket relationships. I am not usually as concerned with the bond market. I put this up here, the ZB, because a lot of my clients trade bonds. Some of our management have a lot of experience with the bonds, and so I do follow them. But a lot of times the relationship between the bond market and the stock market is too out of whack for me. And a good example is today. As I say this, bonds are up a full handle, and the S&P is up 15 points. All right, what happened to that, inverse relationship between bonds and stocks? Well, a lot of times that relationship is strong, but lately we've seen that become very disjointed. So I actually don't pay that much attention to the bond market, but I wanted to use this as an example of how to make this overlay, and we'll show you how to do this in greater detail in a minute as well. The yen is the magenta line, 6J. That to me is a little bit more relevant. That also has an interesting relationship with respect to the stock market. It also is typically inverse, but just like any other relationship, it comes and goes, and you have to be nimble. You can't rely on it as rock solid. But what I will say is that when I say context, when I'm talking about these entries, I'm often referring to the idea that sometimes one of these markets is driving the other. A really good example is with crude. So crude oil is not terribly relevant to me right now at a $54 price. But would crude be more relevant to a decision to go long the stock market if it were at $43? Probably. Here's what I mean by that is let's say that hypothetically speaking, the market is coming lower and it's reaching an area where I might consider a long. It's exhausted. It's made a sharp move lower. It's like, okay, this thing's got to be petering out soon. It's worth the risk. And I see crude making a new low or diving at 43 or 44 bucks. There is a that is a freight train you should not step in front of. Okay, because at 44 or $45, people are now worried about the price of crude affecting energy prices. Energy stocks are coming down. It's pulling the stock market down with it. So I don't always look at the price of crude oil when I'm looking at the equities, but there are certainly situations where other markets can tell you something about the strength or the reason why the market is doing what it's doing. Another example would be if you were uh, if you were getting ready to go short the market. So let's say this market makes a violent move higher up into this MPD area and you're thinking about going short. All right. What would make you not want to do that? Well, there's a couple things, and one of them is related to the yen, in my opinion, and we'll go a little off topic here, but the other one is related to the other indexes. So if all four of these indexes are ripping through the highs at the same time, is that a good place to probably think about going short? Probably not. I definitely wouldn't be short the NASDAQ, if anything. I mean, if anything, you might argue going short on the Russell because you can use a wider stop in the Russell because the Russell is so much smaller in terms of its cash value. So you can usually afford to use a wider stop percentage-wise and not risk any more money. The NASDAQ is the wildest right now, the most volatile. The Dow and the S&P are very volatile as well, and they're all worth a great deal more than the NASDAQ or than the Russell is. So that's a good example of context. Just because you see the magenta arrow, it doesn't mean that you should blindly take the trade. That's going back to the discussion of the automation. Why don't you just automate it? Well, there are some things that I'm not sure I'd want to leave up to the computer to make the decision. Some of this, there is some subjectivity here. All right, although I have tried to automate it, and I'll demonstrate that in another video. And it does work. Physically it works. I'm not sure it would work in terms of profitability unless it were tweaked by someone smarter than me. But again, a lot of context here. So if the market were rallying higher and the yen is it's diving. The yen is diving, 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 diving. That might indicate that there is an outflow of capital from the yen that's pouring into the stock market on a very large level. That would be a good reason to avoid a short. All right, now you could fade that and be right. I mean, you might be right, enough to give you confidence enough to do it. But if you see that yen really, really tanking, and this angle is a strong downward angle, because we're not seeing a lot of detail about the price here. We're just seeing kind of the price and sort of the direction of the line. If that line is really pointed lower and you're looking to go short the market, you might want to second guess that, or you might want to raise your short to at least have a chance to save some money on your entry and get a better price. You might miss the trade as a result of that, but if you see the yen making a really hard low, that's a good sign that there's a chance that, in my opinion, a better chance the stock market's going to continue whatever rally that is ensuing. So if you're gonna take that counter trend short, then you better be willing to use a wide stop, or take some pain, or move your entry high enough where you got a better chance at catching it by the time it's petering out. So that's what I mean by context. So what I'd like to show you in another chart book here, which is called Overlay Sample, is how to build this kind of overlay. I did the same thing with the tick here. Okay, so a lot of times going back to the main window, I put these on the same as the CCI just to save space. There's no other reason why it's on the same panel other than to save space. But the idea with the tick, as many of you know, is a lot of times people will use the tick to fade the stock market. So if they're long the market and they see a 1200 tick reading, you might say, okay, this thing is going to peter out here any second, and that's a good reason to take your long off. Or if the market reaches like a negative 1200 tick, that's usually a very violent move lower, minus 1000, minus 1200, although you probably want to be a little bit more careful on the downside because the market does fall, generally speaking, quicker than it rallies, right? So usually it's on the upside. If you see a really high tick reading, then and you're long, that's a good reason maybe to tighten up your stop or take the trade off, right? So that's why one might want the tick here. The whole idea of putting it on the same chart was to avoid having to have another window open and avert your eyes. Okay, so going back to the overlay sample here, what I'm going to demonstrate, I'm not going to go through building all of these, but I'll give you an example of how to do a quick one. Is you just open a chart. So I'm just going to say, let's go to File, Find Symbol, and I'll just do an E-mini S&P chart. So here's our S&P chart. And let's say that I want to overlay the gold market on my S&P chart. So here's my S&P chart. What I need to do is first open a gold chart. So let's go to Find Symbol. I'm just going to type in GCJ9 because we just rolled to April. Like that. So we don't even need to keep this visible. Don't close it. It's got to be open. Okay, you can minimize it, but it's got to be open in the same chart book. And you just right click on the chart, go to Studies, and I like to use the Overlay Single Line Study. You can use Overlay Bar if you want it to look like another candlestick, but I typically don't. So I would do Overlay Single Line, okay, like this. There's a non-sync option if you're going to do something on a different time frame. These are both 5-minute charts, so I'm just going to use Overlay Single Line, click Add. And then in the settings section, it's really easy. There's not that many inputs. What chart are we overlaying? Well, you click this drop down, it's going to show you all the charts that are open in the chart book you're in. I'll just pick gold. What region do we want it in? I'll put this one in region 2, which is kind of like we have on the other chart here, so I'll leave that region 2. There's no multiplier or anything like that. In some cases, you might want a multiplier. Here, we don't need it. And in the subgraphs tab, we could just pick the color. I'll just do like a nice gold color, like that. Thicken up the line a little bit. I can do a value label. If I want to do a name label, I could just do something like GC, like this. Push apply, and there's the price of gold. So you can actually just repeat this process for whatever markets you want. All right, let's do one we don't have here yet. Let's say, the euro. Okay, so I just go to Find Symbol, 6EH9, that's the euro. Open intraday chart. We can minimize it. And then I could just right click Studies. I can actually just duplicate this. I mean, we're going to change a few things, but duplicate the study, pick a different chart number to overlay. I'll just pick the euro. And then let's edit the color scheme. So I'll make this like this blue color, put 6E in here like that, push apply. Now we've got the euro. Now, one funny thing about this is that the euro, what's happening is the euro is using the same price increment as the main price graph. So in the settings and input section, you can actually change the value format to match whatever the actual contract uses. So with the euro, you'd want to make it actually 5 digits. Okay, it actually goes out to 5 digits now, like that. Okay, so you wouldn't have you might not have to do that. You might not care that much about the specific price. You might care more about the pattern that you're seeing. But this is a nice way to keep an eye on a number of different products at one time without having to have a ton of different charts open, especially if you're one of these people who looks at a variety of products but doesn't necessarily trade a variety of products, but you just use them for your analysis. So going back to the main chart screen here, that's where this stuff comes in. All right, so at this point, we've covered quite a bit. I mean, there are some levels on here we haven't yet explained. We'll go into a little bit more detail. We've covered the CCI, we've covered the tick, now we've covered the overlay. I think we're making some serious progress. I would love to hear some questions, comments. If anybody would like to comment in the comment section or email me about your thoughts up to this point, that would really be fantastic. We really appreciate the feedback and the interest that we're getting, and the appreciation we're getting for the support for Sierra. So please keep it coming, and we'll move on to the next video. Thank you and have a great day.